Hi, today we'll delve into a specific practical example to see what potential earnings we can achieve when we invest independently versus when we invest through a prop trading firm. Enjoy the video. Let's imagine that we have two traders, Trader Mark and Trader Andrew. Both have $2,000 available for trading. Trader Mark decided that he will only trade with a CFD broker. He deposited $2,000 in the broker's account on January 1st. He's a good trader and maintains a steady return rate of 5 to 7% per month, which averages out to 6%. Mark withdraws the profit every month. With a capital of $2,000, an average profit of 6% gives him $120 to withdraw every month. In a year, Mark earned $1,440, a decent result, but one must admit it's not enough to live on. Andrew's skills are on a similar level. His monthly profits are usually around 5%, but he decided to take a different path and start working with a prop trading company. He wisely divided his $2,000 capital into 4 smaller parts of $500 each, so that he had several chances to approach the challenge in the prop trading company. With an investment of $500 in the challenge, Andrew can gain access to trading on an account with as much as $100,000 in capital. But don't worry, the challenge comes first. Usually, to pass the first phase of the challenge in a prop trading company, you need to achieve a profit of 10% while not losing more than 10% in total and not exceeding a daily drawdown of 5%. The next step in a prop trading company is to move on to phase 2. Most often, the goal for this phase is to achieve a 5% account balance under the same risk conditions. After passing both phases one after the other, we gain access to a funded account. Let's get back to Andrew's situation. Like Mark, Andrew starts trading on January 1st. He begins the challenge in the prop trading company for $500. Andrew trades bravely, but unfortunately, after a month, Andrew makes a slip. His temporary loss during the day exceeds the allowed 5%, and on February 1st, Andrew loses the challenge account. He has $1,500 left from the investment. Andrew doesn't give up. He buys another challenge for $500. 2 weeks, and the same thing happens again. In mid-February, Andrew decides to take a 1-week break from trading to analyze his mistakes, draw conclusions from them, and improve his trading plan. Andrew approaches the challenge again on March 1st, and we have a success. After drawing conclusions, Andrew improves his risk management method, which allows him to complete both phases of the challenge. It took him as long as 3 months because he traded much more cautiously than before. It's already June 1st, and compared to Mark, Andrew hasn't withdrawn a cent from trading yet, and his bank account balance has only dropped from $2,000 to $1,000 because he bought the challenge twice. But what did Andrew gain? By passing the challenge, he gained access to a funded $100,000 account from a well-known prop trading company. The trading rules on such an account are usually similar to those during the challenge. Our maximum risk is 10%, and the maximum daily risk is 5%. At the same time, we no longer have the pressure of achieving a set profit goal. This means that Andrew's balance has a margin of as much as $10,000 to lose on the funded account, when his investment so far was only $1,000. That's 10 times more than he invested. Andrew decided not to tempt fate, and even though his strategy has so far brought an average profit of 5%, he reduced the risk by 50%, and his monthly profits were down to 2.5%, which may not seem like much. However, for Andrew, who's been trading on a funded $100,000 account since June, a monthly profit of 2.5% is as much as $2,500 at the end of the month. Most prop trading companies share profits in proportions of 80% trader, 20% prop trading company. So after the split, Andrew is left with 80% of $2,500, which equals to a $2,000 profit in his pocket. Andrew repeats his result every month from June, ultimately withdrawing his profit 6 times. So 6 times 2,000 gives us 12,000. Even subtracting 1,000 from the investment gives a profit of $11,000 from trading in half a year. Now, let's remind ourselves of Mark's situation. Despite trading with a broker all year round, and a better monthly percent return rate than Andrew, Mark's result is $1,440, which is almost 10 times less than Andrew. Additionally, Andrew starts the new year still with a funded account and a large reserve of capital that he will use to purchase more challenges to increase his capital allocation. After this example, it is clear that prop trading provides a great opportunity that is not available to many people without external investors. With such earnings, a trader can focus only on trading. It can be his main income, which can make him even more effective. Remember, however, that trading in a prop trading company also requires a lot of patience and consistency. Always invest as much as you are willing to lose, and always make informed decisions. If you have any doubts, don't hesitate to seek professional advice. As part of fxprop, we also have dedicated free tools for you that will significantly increase your chances of passing such a challenge, so you'll have an additional advantage at the start. We hope that this video helped you better understand potential earnings from prop trading. Prop trading is not only about profits, but also valuable learning and personal development. This is where we end today's video. Join us in the next episode where we will discuss in more detail the differences between a CFD broker and a prop trading company. See you next time.